Hi and welcome to this Blueberry Markets video update with me, John Kibler, Senior Market Analyst here at Blueberry Markets. In this week, I'm going to show you the Forex week ahead analysis video. We're going to go over some key events for the upcoming week, as well as some key charts to watch, so stick around for that. First of all, lots of data coming out this week. Again, very much based around the US markets. We've got the US ISM manufacturing PMIs as well as the services PMI. We also have speeches from Federal Reserve Chairman Powell, and then that is followed by NFP data. NFP actually looking to come in a little bit lower than previous, down from 275 down to 205k. Again, looking to see if we get any kind of revision on this data. Talking about revisions, last Friday we had a revision in the US Core PCE Price Index, which was adjusted from 0.4% to 0.5% for January. Obviously, we had bank holidays last week, so we didn't really see the volume in the market that we're expecting. And I'm expecting to see if there's any kind of follow through in this week's data. Essentially, the US Core PCE Price Index is the more favoured data from the Federal Reserve. Now, we did actually get Federal Reserve Chairman Powell speaking after this, and he reassured that inflation risks still remain subdued. So interesting to see how the manufacturing PMIs and services PMIs come out this week. Going on to the strength meter then, dollar returns as the dominant currency, pound starting to find a little bit of weakness in the market, CAD following that US strength in the market. Could be backed a little bit by those oil demand that we're seeing at the moment, and Swiss franc starting to show a little bit of strength here on the reversal side of things, although I still quite favour Swiss franc shorts because of the situation with the Swiss National Bank. Going on to the US dollar index then, so a bit of a flat week last week as to be expected. I'm expecting the first half of this week to be fairly similar till the data starts kicking off. We are very, very close to the 104.90s though at the moment, so if we were to see any upside, that would be my first resistance point. Any breaks above that, then potentially 106 could be of target. Breaks below 104.28 I think would open up a little bit of a move more down towards the 103s. Going on to Euro US dollar, trading at 1.0800 at the moment. You can see that's that kind of neckline area or previous sort of highs where we have started to find some support and resistance in the past. However, not a very convincing buy momentum from at the moment from buyers down at this level. So if we were to continue to see some downside, maybe breaches of this daily or Friday's candle low, it could offer further selling pressure down towards the swing lows at 1.0700. Dollar yen, very interesting market, the US dollar yen at the moment. Obviously, last week we had some data from the Bank of Japan and Japan officials very much talking about the fact that there was potential intervention coming in the yen, and the market kind of held at this 152, very crucial swing high. So I think if we see a breach of 152, it could lead to a very explosive move up towards the 160s. Any kind of rejection at 160, I would expect that to be a point of potential intervention in the market, and we could see a lot of volatility. But 152, the sticking point at the moment. Will this hold or will price break is the kind of question I'm asking myself around that level. Finally, gold continues to rally, very much in demand at the moment. Gold due to sort of global situations in the market and global demand. We took a look at the COT reports last week. They didn't really highlight anything to me that would suggest that there's a top in this market coming anytime soon. Obviously, I am monitoring the COT reports on a weekly basis, and I won't get the latest release just yet. But we've breached this level around about that $2,208 mark. This consolidation would be interesting to me. Now we've breached it, will we test it on the other side? We have already kind of had a test in that zone and the market rejected, but if we come down a secondary time and test it and find buyers again, could be a good point to see gold continue to extend to the upside. A break back within that high, I think we'd probably see a little bit more downside in gold. That's all I've got for you. Hopefully you enjoyed this video. If you did, hit that thumbs up and subscribe if you're new, and I'll catch you in the next video.